If you've been watching silver over the past 12 months, you already know this metal has been absolutely on fire. But here's the thing. Most traders are still watching silver the wrong way. They see the headlines, they see the big price numbers, and they react emotionally. What they're missing are the specific price levels, the exact lines on the chart, that tell you what is actually happening and where this market is most likely to go next. That's exactly what we're doing today. We are going to break down silver's massive breakout in full technical detail, the chart patterns that predicted it, the key levels every trader must watch right now in March 2026, what the indicators are actually saying, and the price targets that could define the next 6 months of this market. Let's get straight into the charts. Section 1. The big picture, what silver just did on the charts. Let's start with the macro chart view, because what silver completed in 2025 was not a normal breakout. It was the completion of a 50-year cup and handle pattern, one of the most powerful and rare technical formations in chart analysis. For those unfamiliar, a cup and handle is formed when a price rises to a high, pulls back slowly, and rounds out like the bottom of a cup, then consolidates sideways in a tight range, the handle, before breaking sharply higher. Silver's cup took from the 1980 all-time high of $49.95 to form. That's a 4-decade-long cup. The handle formed between 2020 and early 2025 as silver consolidated in the $25 to $30 range. When silver broke above $50 in October 2025 for the very first time in history, it completed this pattern. Technical analysts called it, and I'm paraphrasing the analysis from Investing Haven, the most powerful bullish reversal in the history of the silver chart. In the context of a cup and handle, the measured move price target is calculated by taking the depth of the cup and adding it to the breakout point. The depth of silver's cup, from the 1980 high to the 2020 low near $12, is roughly $38. Added to the $50 breakout level, the measured move points to approximately $88 per ounce. Silver exceeded that target when it hit $121 in January 2026. From a pure charting perspective, this confirms that the breakout was genuine, powerful, and rooted in decades of accumulated technical energy. Now the question is, what comes next within this new bull market structure? Section 2. Live key levels, the exact lines every trader must know. Let's get into the specific numbers. As of the 1st of March 2026, silver is trading around $93 to $94 per ounce after its massive January all-time high of $121.67 and the subsequent crash and recovery. Here are the key levels that define this market right now, from the downside up. Starting with support. The first line of defense on any pullback is $77.60. This is the critical pivot floor identified by multiple technical analysts as the level that, if broken on a daily close, would signal a more serious bearish move. Below that, $70 per ounce is a major psychological and technical support. It corresponds to the long-term rising trend line that has defined silver's 2025-2026 bull run. A sustained break below 70 would likely open the door to $55 to $60, which is the former breakout level of the 2025 leg, and now acts as long-term support. The key moving averages currently sitting as support are the 50-day simple moving average at $85.35, the 50-day exponential moving average at $79.92, and the critical longer-term reference, the 200-day simple moving average at $52.90, which is the foundation of the entire bull market. As long as silver trades above $52.90 on a monthly closing basis, the long-term bull case is completely intact. Now for the upside resistance levels, the gates that silver needs to clear to continue higher. The first major resistance is at $84. This is the area where silver formed its topping pattern after the January crash, and a clean break and hold above 84 is required to confirm the recovery is real. The next critical level is $92.20. This is the pivot level that analysts have identified as the key gate for a bull continuation. If silver can break and close above $92.20, it opens the door to $95.90 as the next target. Above that, $102, then $112.50, and ultimately, a full retest of the all-time high at $121.67. The psychological level of $100 remains a massive magnet for price. Every major bull forecast converges on $100 as a near-term target if the $92 gate is cleared. Key support and resistance levels. Table level price type. Significance. $121.67. Resistance. All-time high. January 29th, R3. $112.50. Resistance. Pre-ATH ceiling zone. R2. $100. Resistance. Psychological target. R1. $95.90. Resistance. Next breakout gate. Pivot. $92.20. Pivot. Key decision level. S1. $85.35. Support. 50-day SMA. S2. $79.92. Support. 50-day EMA. S3. $77.60. Support. Critical floor. Stop zone. S4. $70. Support. Long-term trend line. 2026. S5. $52.90. Major support. 200-day SMA. Bull base. Section 3. What the indicators are telling us right now. 6:30 to 9 o'clock. Now let's look at what the technical indicators are actually saying as of late February and early March 2026. The picture is mixed in the short term but overwhelmingly bullish on longer time frames, and that divergence tells us something important. Starting with RSI, the Relative Strength Index, currently reading between 44.5 and 53.9 on the 14-day period, depending on which platform you look at. That reading puts silver squarely in neutral territory, not overbought, not oversold. This is actually healthy after an extreme overbought reading above 70 during the January spike. The RSI coming down from overbought extremes and stabilizing in the neutral 50 range is often a sign that the market is digesting its gains before the next leg. On the MACD front, the moving average convergence divergence is currently negative at between -0.7 and -1.3, which means short-term momentum is still net negative from the crash. However, the histogram is recovering, and the signal lines are trending toward a potential bullish crossover. That crossover, when it comes, will be a significant buy signal for short-term traders. The moving averages paint an overwhelmingly bullish long-term picture. Every single major moving average, the 20-day, 50-day, 100-day, and 200-day, is generating a buy signal. Silver is trading above every key moving average. The 200-day simple moving average at $52.90 is rising steeply, confirming the long-term uptrend is firmly in place. The ADX, which measures trend strength, is currently at 15, below the threshold of 25 that signals a strong directional trend. This low ADX reading confirms that silver is in a consolidation or ranging phase right now, not a strong directional trend. This is consistent with the thesis that silver is building a base before the next major move. The parabolic SAR is signaling an uptrend, while the Williams %R reading near -0.01 suggests the market is approaching overbought territory on shorter timeframes. The ATR, which measures average true range or volatility, is at $3.57 per day, which means on a typical day, silver is moving $3 to $4. For context, on a $90 metal, that's 4% daily volatility. This is not a market for the faint-hearted. Live technical indicators table indicator value signal, RSI, 14-day, 44.5, 53.9, neutral, rebuilding. MACD, -0.69 to -1.32, sell, recovering. 20-day EMA, $83.04, buy. 50-day SMA, $85.35, buy. 50-day EMA, $79.92, buy. 100-day SMA, $67.62, strong buy. 200-day SMA, $52.90, strong buy. ADX 15, no strong trend, ranging. Parabolic SAR, uptrend signal. Williams %R, -0.01, sell, overbought zone. ATR, volatility, 3.57, moderate volatility. Section 4, 3 chart patterns to watch in March 2026, 9 to 11:30. Beyond the static levels and indicators, there are 3 active chart patterns that every silver trader needs to have on their radar right now. The first pattern is the ascending broadening wedge on the daily chart. An ascending broadening wedge forms when price makes higher highs and higher lows, but the range between highs and lows is expanding, like a megaphone opening to the right. This pattern signals very strong volatility within a bullish price structure. Silver formed this pattern after its December 2025 breakout. The technical target for the current ascending broadening wedge structure, based on the analysis from FX Empire's Mohammed Umair, projects price targets between $85 and $90 as a near-term objective within this pattern, levels silver is currently testing. The second pattern is the symmetrical triangle on the shorter timeframe charts. After the January crash, silver spent most of February forming a symmetrical triangle, a coiling consolidation where price makes lower highs and higher lows, compressing into a point. Symmetrical triangles are continuation patterns. They typically break in the direction of the prior trend. Silver's prior trend was up. The breakout from this triangle, which appears to be developing now, targets the $92 to $95 range. The critical confirmation level for this breakout is a daily close above $92.20. The third pattern is one to watch as a warning signal, a potential double top. As noted by FX Empire analysts, if silver fails to break above the $84 level and rolls over from current levels, it creates a double top formation, a bearish reversal pattern. A double top confirmed by a break below $70 would be a technically bearish signal targeting $65 to $60. This is the bear case that caution-minded traders are watching. The critical takeaway? The market is at a crossroads. Above $92, silver is back in a bull continuation. Below $77.60, the bears take control. Section 5. Price targets, where the technical setup points. Now let's put it all together, the breakout pattern, the key levels, and the indicators, and talk about realistic price targets for March through mid-2026. The Commitment of Traders (COT) report dated February 17, 2026, shows that managed money net long positions in silver futures, that's hedge funds and commodity trading advisors, are at only 5,472 contracts. During the January rally to $121, those same funds were positioned at multiples of this level. What this tells us is that the speculative heavyweights are largely on the sidelines right now. They got washed out in the crash. They're waiting for a confirmed base and a clear breakout signal, most likely a sustained close above $92, before re-entering. When they do re-enter, the buying power they bring could be the catalyst for the next explosive move. The near-term technical target range for March 2026, based on the consolidation pattern resolution, is $75 to $92. That's the consolidation base. A breakout above 92 triggers a run toward $95 to $100, the first major upside target. Beyond 100, the next technical milestone is $102, followed by $112.50, and ultimately, a full retest of $121.67. On the downside, the bear scenario has $77.60 as the critical floor. A break below $77.60 opens up $70, and a break below $70 opens the door to $60 to $65. JP Morgan's official forecast is for silver to average $81 in 2026, with a high of $85 in Q4. That now looks deeply conservative given where silver is trading. Citigroup's target of $150 by mid-2026 looks aggressive, but not impossible, if hedge funds return to the market and physical inventories continue tightening. The most data-grounded base case. Silver most likely consolidates between $77 and $92 in March, then either breaks higher toward 100 or, if macro conditions deteriorate sharply, retests the $70 support before resuming its trend. Closing. Let me give you the 3 things to watch every single week if you're trading or investing in silver. Number 1. Watch the $92 level every single day. A daily close above $92.20 is your bull confirmation signal. That's the level that brings hedge funds back and opens the door to 100. Number 2. Watch the RSI trend. Right now it's in neutral territory between 45 and 54. If it pushes above 55 and holds, momentum is rebuilding. If it drops back below 40, the short-term bearish scenario gets more likely. Number 3. Watch the COT report every Friday. Managed money net longs at 5,000 contracts means the next wave of institutional buying hasn't started yet. When you see that number climbing back toward 50,000 contracts, the next major leg is beginning. Silver's breakout is real. It's structural. The 50-year cup and handle is in play. But in the short term, this market is volatile, range-bound, and waiting for a catalyst to define its next major direction. Trade the levels, not the emotions. Use the data, not the headlines. If this technical breakdown was useful to you, hit like, subscribe for weekly silver chart updates every Monday, and drop your key level to watch in the comments below. I'll see you in the next one.